Welcome to Investors Insights. Our topic today is expect the unexpected. We are thrilled to be able to bring this information to you today, and we're going to continue our dialogue throughout the week on social media, Twitter, Facebook, LinkedIn. And we're also going to encourage you to go back and watch our previous vlogs as we talked about September would be a time to remember, and it's definitely been very volatile. And this morning, my distinguished colleagues, and I like calling them that because I have tremendous respect for them and have fun in the process, Bobby Norman, Adam Van Zandt, and Trey Booth are joining me. And guess what? We're saying in October, expect the unexpected. Bobby, you woke all of us up in the early morning meeting with your comments about fourth quarter expectations. Why don't you start us off and just elaborate on that?
Yeah, Greg, as you mentioned in our first vlog in the first week of September, we highlighted the historical volatility seen in the month of September and that it could be a September to remember. And in fact, it lived up to its tough reputation as the S&P 500 index fell 4.8% in September, really for the worst September in 10 years and the worst month since March of 2020. So the S&P 500 is officially down more than 5% from the recent highs. And it was the first 5% pullback we've had in about a year.
Yeah, well, Bobby, I want to say something here. I'm interrupting you, but just from the standpoint, I like to highlight those kind of things because we want people to understand the value of these vlogs and that we are providing insight on where we think things may go. There's no guarantees, but we like to give them the data and information so that they see why we're making adjustments in their portfolios. So thank you for saying that.
Yeah. And we also saw the NASDAQ lost over 5%, really due to the higher 10-year Treasury yield caused the growth-laden index to underperform. But at the end of the day, we think that some seasonal weakness is perfectly normal here. So as we head into October and the fourth quarter, we are optimistic from a historical perspective. You know, as always, no guarantees. But as you can see in this chart, since 1950, the S&P 500 index has been up 78.9% of the time in the fourth quarter and up 4% on average, both the best of all quarters. So while October is historically, fairly volatile, the fourth quarter overall has seen strength. And the question for October will be how resilient the market will be with the continued uncertainty with the news coming out of DC and also the uncertainty around the supply chain constraints.
No, and I thought that was a great chart that you presented this morning in our meeting. And we hope we get to see those kind of results. As you said, no guarantees. And with that, Trey, I'm going to come to you next because throughout this year, you have really focused on earnings. And here we are in the fourth quarter. So the point I want to make to our viewers is that in 90 days, we will have celebrated ringing in the new year of 2022. It's hard to believe. And there's a lot going on in fourth quarter, a lot of conversation in terms of Fed. And as Bobby said, what's coming out of Washington in terms of tax proposals, those kind of things. But at the end of the day, earnings are very important to this market. So talk about that.
Yeah, definitely. Earnings have been driving this market higher. The market's been, I'd say, climbing a wall of worry, but earnings have been very strong. Something we're looking at though closely is its third quarter earnings as they begin to report. Will that be a positive or a negative for the market? With so much volatility, we think earnings may drive continued volatility. On this chart, you can see that the next 12 months earnings expectations, so that's looking forward, not necessarily focusing on this current quarter. You'll see the expectations have really been on an upward trend since they bottomed back in 2020. But that trend seems to be kind of turning over. So what may be driving that turnover in expectations of earnings growth is what Bobby mentioned, potentially supply chain issues. We're seeing cost up, estimated double digits. On this chart, you can see the year over year S&P 500 companies' costs are up almost 10% and rising. We also have another chart that I feel like is helpful. It shows that the mentions of the word shortages in transcripts is at an all-time high. You can see it's really spiked over the last few months. And so all that's driving is uncertainty around how companies are going to react to shortages. We're seeing prices go higher. However, for all that production, higher prices may hurt one company, but it may help another. So far, we've only had 16 companies report earnings. So that's not really a statistically significant number. But what the market's reacted to those earnings is interesting. 12 of the 16, we've seen the market move up or down 3% on those earnings news. Six of the 16 moved up 3% or more, and 6 of the 16 moved down 3% or more. I think that may be what we see going into the fourth quarter with earnings season. As companies report, we're going to see a lot of reaction because the market really hasn't priced in how these shortages impact to the good of some companies and to the bad others, the bottom line. And so this market seems to be a little bit surprised by numbers that we've been talking about for months. We've talked about supply chain bottlenecks, shortages, commodity prices going up. And so I'm shocked to see the market really kind of react as it is. But take what we will from the data. I think that we're going to have maybe some volatility in earnings season, not necessarily to the bad. Again, we could see spikes to high side as companies report better than expected profits because they rose costs. So something to watch very closely as we get into earnings season. Could drive some volatility, but could at the end of the day, as Bobby pointed out, lead to a better end to the fourth quarter than we saw into the third quarter.
Right, and we, as you said, we've been talking about that topic in terms of supply chains throughout the whole year, and here we are now in fourth quarter. And just to put it in real world perspective, we have clients that'll be calling in here saying, "Hey, I'm taking out money for the holidays and to do things," but there's a good chance that the old saying everybody's grown accustomed to, you order it in 2-day free delivery. It may be harder to get things this holiday season. You agree with me on that, Trey?
Yeah, definitely hearing some early talk from a lot of the retailers about shortages for the holiday season. So, that Black Friday big deal may not materialize. You may want to go ahead and get. It may be better to have your product in hand than to have it at half price down the road, maybe.
Yeah, very, very much so. So here we've talked about expectations in fourth quarter. Trey, you've talked about the earnings and how we're focusing on that. And a guy that I drive crazy throughout the week as we look at technical indicators and as we're seeing the volatility in this market. Adam, you've got some insight for us, just key indicators that people need to be watching. So talk about that.
Definitely, Greg. I appreciate it. So Friday's S&P close came in at 4,357. It gives us a new resistance level of 4,390 with a new support level of 4,330. Bobby talked about a shaky September that we saw, but despite that, the 100-day moving average, which is more of an intermediate term, is at 4,346 for the S&P 500. So, looking at it from a further out view, it doesn't look as bad on the surface as it did for the month of September alone. Trey also alluded to earnings season coming up, so that's going to be really important to look at those resistance and support levels for the end of the year. And we'll start to give some of those longer-term resistance levels in our upcoming blogs.
Yeah, no, that you provide a lot of insight. I've had a lot of conversation with people that when they match up earnings and expectations with the technicals, they understand why we're making moves in the portfolio. And you're correct. The market overall, yes, we've had a pullback, but there's still a lot of cash on the sidelines. And we're going to be watching that very closely to see where that cash moves as we go in to the rest of this fourth quarter. We hope you have a great week. We can't believe that here in 90 days this year is over with. We're going to keep you updated, continue to watch, and also with great appreciation, thank you for sharing this vlog with others. It's been fantastic, the response that we've gotten. Have a great week. We'll keep you informed. Thanks.